Okay, we're live, John.
Okay. It's 9 o'clock. I'll call the meeting to order. Was the meeting properly noticed?
Yes, it was.
Clerk will take roll.
All members present.
Okay, we have the agenda before us. Motion to approve.
Yes.
Supervisor Varsky, second by Supervisor Scott Pease. Any discussion or questions on the agenda? Seeing none, all in favor signify by saying aye.
Aye.
Those opposed signify by saying nay. The agenda is approved. We have the minutes from September 9th and the 20th. Motion by Supervisor Scott Pease, second by Supervisor Rick Pease. Any discussion or questions on the minutes? Seeing none, all in favor signify by saying aye.
Aye.
Those opposed signify by saying nay. Minutes are approved from September 9th and the 20th. A lot of public participation as we move through the agenda. Any correspondence?
No.
Then the next thing on the agenda is the airport land acquisition presentation by John.
Mr. Chair,
Yes,
I would like to welcome Mr. Josh Holbrook from, who's the airport development engineer with the Bureau of Aeronautics, who's going to now be presenting on the airport land acquisition.
Josh.
Did you join the Zoom meeting? No. You're gonna need to join the Zoom meeting so that the public can see the presentation.
So there's a, on the calendar. To the internet. You guys can see it there, right?
Yeah, the presentation though, right?
Oh, this. You're in, right?
Heck, yeah.
Oh, yeah, I think you
That's all. I'm a good response right there.
This meeting is being recorded.
So are you doing the? You have the presentation outline? Oh, okay. Unless you're gonna click it for him. You make him a co-host and have him present it.
Looks good to us. That ain't the same the time.
Right. That's about an outline. I just wants to.
They're seeing, I believe they're seeing exactly what you see.
No, not really.
Oh, let me see.
The side that.
No, line on the separate, like a.
Yeah. Okay, they see that.
Yeah.
Yeah, they see that. All right.
Come back after.
How do you make the public see what he's presenting?
You have to make him a co-host so you can share a screen.
I did, I made him a call.
Oh, so then you gotta go into your Zoom and share your screen.
Give you the same. Go ahead. Say shit.
I'll have to click on the image itself. Make sure.
You don't have to
all your presentation and do it.
Yeah.
doing?
Doing the heck, yeah, you do.
Okay, good.
Yeah.
All right, hi everyone, I'm Josh Holbrook, I'm from Wisconsin Bureau of Aeronautics. And I was asked to come up to talk about the land project that's currently underway. Unfortunately, our land specialist couldn't be here, so I'm going to do the best that I can to answer any questions you have about that project. And three main things I want to answer for you are, why are we doing it? What land's being acquired, and how are we purchasing that? And just feel free to ask some questions as I go. One other thing I would like to say is this project got started a year before I even started at the Bureau of Aeronautics, so I will do my absolute best, but I'll probably have to take some notes and get back to you on some stuff. So in order to answer why we're purchasing the land, I need to define a few surfaces that the FAA references. If you see the picture here, the first one is the runway protection zone, and it's the yellow trapezoid that's on the screen. That is a ground level surface that the FAA likes airports to control. And I think you can think about that as if an overshoot or if an undershoot or overrun happens, that's kind of unfortunately, the area where planes crash. And so the purpose of that is to protect the people and the property, not only the people and property, but the owner for liability. And then the next is the approach surface. That's the green one that's indicated on the slide. It's the trapezoid that the aircraft follow on approach. So it's actually sloped at a 20 to 1. And think of it as the entrance ramp to the airfield. It is important to note that there can be objects in that surface, but since it's sloped, as long as they're underneath the slope, it's okay. So if you look towards, I guess, what would be the bottom of the slide, you'll see that there's trees in that slope, but they're probably, 20 feet tall. We could probably be 30 or 40 there if you were to follow the slope that it can be. So in this aerial that you're seeing, there are homes, trees, personal property, all within the RPZ for the yellow. And the purpose of the project was to purchase that property to ensure safe approaches and control the RPZ like the FAA would like. This slide is basically the same as the aerial. It just shows a more graphical so that you can see the areas that are hatched are the ones that we're going to be acquiring. And you can see the black splotches are personal property, trailers, houses, and it shows the reason why, because we don't want those houses in the RPZ. Because if something ever happened, it could open up the county to liability.
So you're just talking the yellow though. Right?
Yeah.
Yeah.
So
Just
yeah,
the yellow, not the green.
well, yeah, the green is the approach slope, and that's just the one that's angled. And I was just trying to show you, the two different surfaces we're trying to protect for. But to your point, you see to the bottom of that, there's a lot more trees and a lot more houses.
Right.
But they're underneath the approach height wise, so we don't have to even attempt to go for those.
Okay.
The ones in the yellow, that's a ground level surface. Yeah, we do have to protect for those.
Have these people been notified that land is in this area?
Yeah, we are actually to the point where we have made offers. And as a part of the project, we can't just come in and make an offer and have the people leave. We're actually relocating them too. We're paying to relocate them. We are in the midst of purchasing the property and relocating the people in those areas.
So what you're saying is you're paying for their house and then you're buying them another house. I mean, that's all separate money.
It's not really buying them a house. You have to give them fair market value for what they have.
Right.
And then, say they want to move to Rome, and that moves $5,000, they're going to get compensated for that move. Correct. And then this, oh, go ahead.
So when we talk about the total purchase of the land, does that include the moving expenses and everything? Because what I was worried about is the cost of that, it's about 14 acres, correct? Right, Rob?
Yeah, I believe you're pretty close.
that's a pretty high price to pay for 14 acres. That's why I was wondering what the real. Are you purchasing the houses then, and then we're gonna remove those, or?
Correct. The ultimate goal of the project is, so this slide I have up shows even more detailed. So on the left of it, you'll see some homes and some garages. So what we'll do is after we purchase this and everybody's been relocated, we will remove the homes and the trees from the area to make the approaches safe for the pilots.
Is this the?
What if, one of these homeowners say absolutely not?
I don't think we've had one say it. I mean, unfortunately, I believe 2 of them have been relocated, and I believe 1 passed away.
Yeah, there's only 3, right?
I think that's 3 or 4.
So is this the only end of a runway that this is applicable? No,
No, sir, this is applicable to every end of a runway.
so why is it we have to use this one now? Is it because of, this one has the most space to, for planes to take off and land?
No, we're doing this because in the photo you see here, the people in the property in the yellow are, it's a risk, not only for them, but for you as the airport owner.
But that hasn't changed. It's been that way for several years. Well,
Correct.
No, okay.
Correct. Where we are in the process of trying to fix what should not have happened. So yes, this would be at every runway end. So on your north end, I believe you have, there's a building up there, a fire station building or
There's a county building.
county. Yeah. So, there's trees up on that end too, that someday we will probably come in and want to take down.
Well, we currently have, east-west that's not developed runway.
Yeah.
Is there anything there that we have to worry about also? Because it's all plotted out, but it's not, doesn't have any pavement on it, but I'm sure there's other grass fields that have plains land on them. I'm just wondering,
Yeah.
do we have to look at that also?
You will eventually. We will absolutely go and look at that. Get the yellow surface. The yellow surface is different for a grass runway, it's smaller, but we will go look at that eventually. And there probably are trees. I mean, airports are always surrounded by trees, so there probably will be trees we'll have to take care of. But I don't believe there's homes or anything in that runway.
No.
Highlines, but.
Yeah.
Will this permit, maybe I'm getting ahead of your report, but will this permit larger planes to land?
No, sir, not the intention at all. It is purely for the safety of the aircraft that use it now. The green surface is the approach there. That's the slots that planes will come in and land. Unless it was your desire to get a bigger airfield, that surface will never get bigger, like wider. So this should be it.
All right, the only thing, when I use this through private jets and so forth, and we had to fly out of the rapids. I mean, these weren't long enough.
Correct. Yeah, your airport's not slated to get bigger in terms of aircraft. That's not the intention. This is just purely for the safety of what it should be.
Okay.
You answered it.
Is it for the safety of the air, or is it safety for the people on the ground?
Both. For the aircraft, because when they're coming in at night, they assume that the approach is protected, clear. And for the people on the ground, I believe, the RTZ, that yellow one is, like I said, when most undershoots or overruns happen. And it's also for the protection of the sponsor. Astute lawyer can pick up on that if something happened.
Take those poles out and move it away too.
You're fine. This slide just, it shows a little bit more detailed view of the green and the yellow that were shown before, and this shows a little bit more of the trailers, the houses, the garages. And if you look, what would be parcel number 12 on there, the 12 bubble, that is a little bit outside of the green, but since we're purchasing an area that kind of cuts it off. Yeah, I can't remember what the rules called because I'm not the land person, that if you take a portion that could affect the overall land, you go for it all. So funding wise, how is this project being funded? For an airport your size, there's basically two funding types that you have. Every single year, you get $150,000 of a federal entitlement. And that can be applied at a 90% rate to any project. So to get to 100%, the state and the sponsor, you both throw in 83-33-ish. Your 2020 and 2021 entitlements were through the Arpa Act or the CARES Act. And so they're both 100% federal. And this will all come into play in a second. And then another pot of money is state apportionment money. That's the money that the feds give to the state. And they're like, use this on the projects that you deem necessary, and you will most likely get some of that money too. And that'll come out of 2020, I believe. So that'll also be 100% federal. So that's basically the two funding pots that are funding this whole project. So like this slide, get to it. What is this costing you? As of today, this project is funded for approximately $732,984. Your share is approximately $20,758, or less than 3% of the entire project. It could go up. The homeowners, they have I believe a year to appeal any moving costs. But that's where it stands as of today. Yeah.
Will that include the removal of the trees and the buildings and stuff?
No, that is actually going to be the next project, because the owner of that property, I believe his name is Mr. Rabble.
Yep.
He, once the land is purchased, I think he was kind of anxious. Well, then let's separate what's yours and what's mine. So what we'll do is we will clear it on the next project and put a fence up. And the fence isn't always necessary to keep people out. It's also to keep deer out, because that area is going to be wooded still.
Could our portion be, and maybe this is a Cynthia question, but that 20,000, could that be used, could we use ARPA funds on that?
So what I'm telling people to do is, you have, I'm going to call it CARES 1, 2, and 3. You have 3 different pots, and you have applied for the money. And I believe yours is in the $75,000 range. You can apply for that for utility bills, fuel. And when you get that money, if you want to take that money and return and put it back into this project, it doesn't matter to me. So I hope that answers your question. So you're trading one bill for another, essentially. But I mean, land projects are very contentious, and we've had many meetings with Mr. Robble, and we're 75% of the way through this. But I know that this project started in 2016, and today you have used your entitlements from 2014, 15, 16, 17, 18, 19, and 20, and 21. So you have 8 years of entitlements, not all of it, but portions wrapped up into this project.
So can I ask the money that those entitlements that are coming through, if they're not spent, they just play or what?
You get 4 years to spend an entitlement. So this year's expiring ones will be the 2017s, 2018s, because we're 22, yeah. So, but those 14. So if you get an entitlement in 2018, it has to be spent by 2022. So you can bank them. And so we've been just applying entitlements as you get them towards this project. That's why I was able to use 2014s, because we started so long ago.
Oh,
So we started the project in 16, so I was able to use 14, 15 to get the project going.
okay.
No other questions? from me?
Executive can help with this question. The only thing the reason why I asked for you this to come before us is because except for seeing on our project, we really didn't know what was going on. And I think if something like this would go, if you're talking about the other runway, I would like to be involved or at least told earlier in the process, I guess. As for somebody for me, I guess that's where I'm at.
Yeah, I think I can speak to that a little bit too. Your airport manager is Mike Scott. Yeah, it was. And I remember when you did an apron project not too long ago, didn't know if you do that. I went to Mike and I'm like, is this project good to go? And at the time, it was Casey Bradley. He was like, yeah, I vetted that project through Casey. So you probably won't have any projects moving forward, including the clearing of that land, until your manager or whoever your approval authority is. The way I understood it is Mike was allowed to do projects because he ran them through Casey. That's how I understand it. If I'm wrong, I'm sorry. But future projects, you can tell me how this is supposed to go.
I don't know how it's supposed to go. That's why I asked. So
Mr. Chair, what I can offer you is that when COVID hit, so all this stuff predates me, but my understanding that when COVID hit, somehow quarterly reporting stopped, which should be happening with the airport. And what I'm hoping then with that is that that communication will open up again on a quarterly basis.
reporting to you or to a committee?
Mr. Chair, I believe that goes to, I'm thinking it's either the board or to this committee. I'm not really sure what the next step is, but all I know is when I was reading through some documentation, it was like, oh, wait, we're not doing the quarterly reports. So.
And the airport, I think, is a subcommittee of the property.
Yeah,
committee.
so maybe it's property is where it goes.
Because I think a property committee member is the one that's on the airport commission. Rocky, yeah, but you have to be on the property committee then. Yeah. Okay,
Thank you.
well, thanks, Josh, for the information, and I think you answered everybody's question too, it's just where it was and how it's being funded, so thank you.
Thank you.
You explained it well.
Next item is the audit presentation.
Mr. Chair, I'd like to welcome Ms. Amber Danielski. She's the signing director with, oh my gosh, Clifton Larson Allen, our auditors for the county.
Good morning, everyone. I'm going to start by going through the financial statements packet, and then briefly I'll go over the audit findings and one of our management recommendations, and then as there's questions, just let me know. So with the financial statements, I'm going to start with the audit opinion letter. There were a bunch of new auditing standards that went into effect that impacted more of how we document stuff, but it also changed this letter. So if you, for some reason, had last year's letter up versus this year's audit statement up, you would see it looks a little bit different. It actually starts out with your audit opinion right away. So as part of our audit, we audited your governmental activities, your business type activities, each major fund, and then the remaining other funds, the collective group, as of the for the year end December 31st, 2021. And as a result of our testing, we concluded that in our opinion, the financial statements present fairly the financial position of the county as of 12/31/2021. So in layman's terms, as a clean opinion, we noted nothing that was materially or appeared to be materially misstated that didn't end up being corrected via journal entries or other areas or worked through. And this is what the county strives to get out of its financial statement audit. The rest of this letter talks about the different auditing standards we follow, and then what responsibilities are of management in regards to these financial statements, and then what we're responsible for those financial statements. These financial statements, this 100-page document, is the responsibility of management to prepare. We prepare this front letter and then a couple other letters, but the responsibility of these financial statement preparation is at the county level, and we audit based on risk assessment of it. So we understand or gain an understanding of the internal controls of the various departments in the county and design our tests and plan our tests based on the stuff we've learned, and also stuff from reading board minutes and different things to understand what different activities are going on in the year to determine where we should focus our time and energy.
Excuse me.
Yep.
Can you let us know what
Okay.
page you're on
It is
and
page one.
you're on the total report, right?
Yep, the big report.
Okay.
Page
So
one.
then, just so Lyanna can
Okay.
have it up on the screen. for
That
everybody
works.
to see.
Yep, that was page one, just past the
There's
table. of
nothing
contents.
on the screen right now. This. page.
Yes. She doesn't have a computer.
Oh, okay.
So you'd have to look on your iPad.
So then, moving then to page 21 of the report, the PDF, I'm not 100% sure what page number it would be, but it's the balance sheet governmental funds. This is your ending balance for your assets and liabilities at the end of the year. For your more significant funds, some of your smaller funds aren't as detailed on this page. So your general fund at the end of 2021 had $23.6 million in assets. 8.5 was in cash and 10.8 was in taxes receivable. There's also $1.9 million in funds that were due from other funds, but those were the most significant assets the county had in its general fund at end of 2021. There were total liabilities of $1.1 million. Most of that was in accrued payroll and just general accounts payable at year end. There were deferred inflows of resources. Those are revenues that you just didn't get within a close enough time period at the end of the year, and just different accounting rules that don't get recorded as revenue to the next year. The bulk of that is your property taxes. So that was $10.8 million. Total fund balance for the general fund at the end of the year was about $11.4 million. And there's various components to that fund balance where there's non-spendable. So that's stuff that you prepaid. So inventory, or if you prepaid health insurance for the next year, you kind of, you've already kind of used that money. It's not available to be used for anything else. Restricted is $26,000. That is when an outside party or state legislation or state statutes restrict how you can use some revenue source. And so then that's why it's considered restricted, because you don't really have a say on how it can get used.
Amber, could I ask a question, please?
Mhm.
Of that tax revenue that's on the books yet, is that from 2021 or is that previous to that?
This would be, the $10.8 million is current year. That was, or I should say, that would be the levy from November of 21 collected in 22. There's delinquent taxes of about $1 million.
So this looks like the presentation that we're looking at. Oh, that's just your letters. Is there any detailed one? So Lyanna, that would be
The third one.
Yeah, it won't move.
you won't know.
Mr. Chair.
Yeah.
Yeah, I can throw it up on my screen. It looks like Lion's having issues with previewing it. I just tested it and I was able to pull it up.
Okay, thanks, Tom.
Which is like Kyle. And what page is that on?
It's 20.
It's a change in the net. Balance sheet. While we're on the balance sheet,
We're on page 21, are we?
Yeah, the PDF is probably gonna be 1 or 2 pages off from that, just because of cover pages and different.
All right, we're not.
Okay. That's good, Kyle. Yep.
Okay.
Okay, I apologize for that. I thought it was. Sometimes these PDFs have a reminder, don't like to open all the time. So as I was saying, the general fund has $24 million in assets. And then ultimately the net position or the fund balance was $11.4 million. The committed and assigned categories, those are different things that have been set aside via actual board resolutions or just management tentative decision saying we're gonna put this toward this project or that project. There's details on that back on page 76 that list which departments or which projects that all makes up. Your unassigned fund balance of $7.8 million is the amount that's not set aside for anything specific. This is your cash flow balance. This is what can be used for unanticipated expenditures that popped up that you didn't know about in the next year's budget. So, and that is approximately, obviously that's your biggest part of your fund balance. And one one metric we like to look at is what percent of your total expenditures is that for a given year, just to kind of, just for, assessment of where, how much funds you have to be able to give you wiggle room if unanticipated expenditures do pop up. And that calculation was 54% of current year expenditures. So you're at your policy and up, or above what your policy recommends. Your formal policy is 15 to 20%. And that is usually what we do see as well as a policy at other counties throughout the state is a 15 to 20%. But if you're above or below, sometimes it just, or above, that gives you a little bit more flexibility as you're moving forward and can use that to either maybe reduce what you have to borrow for or just use for planning in different projects.
Yeah, Amber, the unassigned, is ARPA funds in that?
No, your ARPA funds are not in that.
Okay.
Your ARPA funds are actually, I'll get to that on the next page. Your human services fund, just wanted to point out here that there's still a deficit fund balance in the human services fund at the end of 2021. It's about $53,000. The deficit did get better during the year. There was positive growth that offset almost 100% of what the original deficit was in that fund. Your county roads and bridges fund, you have $805,000 at year end to be used towards future road projects and maintenance and snow and ice removal and all the usual expenses for the county highway system. The debt service fund, you'll see that there's $7.2 million listed as restricted fund balance. Part of that amount had been advanced to the sewer, or excuse me, not sewer, solid waste utility for the big building project and will be paid back over the next few years. The remaining part of that is just fund balance on hand to be used towards future debt payments. Any questions on those funds? Okay. Moving then to the next page, you'll see your capital projects fund. Those are the various different departmental capital projects plus your overall general capital projects fund. And at the end of the year, there was $6.4 million left for future capital projects fund. That was a decrease from the prior year. You had spent it down with continued projects. This other governmental funds, these are your smaller funds, and that includes your ARPA fund. So if you look about the middle of the page, you'll see in the liability section, there's a line called unearned revenues. There's $1.8 million in there. That's what was left in the ARPA money that was received in 21 but not spent to be, and so that'll be the amount that'll get spent and then shown as revenue when you do spend that money. Any questions on those? Yeah.
Amber, as long as we're talking about that ARPA, this is received and not spent, so any projects that are in the works right now would still be within this unearned or whatever the heck it's called. Is that correct?
It now in 22, as the money would have been spent, it would have been recognized as revenue to offset anything that you spent now in 22. I think in 21, the county only spent about $160,000, and that got shown as revenue and expense.
Okay.
But then now in 22, as you spent it, and as you got your second allotment, that dollar amount will be adjusted for. If you want to just move then to page 24, this is your statement of revenues, expenditures, and changes in the fund balance for your governmental funds. So basically your revenues and expenses for the year. You had $16.6 million in your general fund, made up primarily in your taxes of $12 million. You had some state aids, shared revenues of $1.1 million. And then your public charges for service, the biggest amount that makes up that $2 million is your park system. But so that's where the bulk of your revenues come in during the year. And that there was $14.4 million expenditures. Basically, you'll see the majority of them were in your general government and your public safety, which is consistent with what we see at a lot of other counties. So overall, your general fund increased fund balance by $1,584,000. And as I mentioned previously, you'll see that your human services fund did address and be able to recoup against some of that deficit. The net increase in that fund balance was $375,000, leaving only that $53,000 deficit to be recovered now going forward.
Amber, I got another question for you.
Yeah.
Regarding human services, Health and Human Services under expenditures is 10 million, and the revenue was, where did you have that?
It's 10.4, 10.5.
Yeah, that, let's see, that's. All right, I didn't think it was that close, so, all right, sorry.
No, no worries. I know sometimes that's, in human services, it can fluctuate sometimes. You know, obviously your tax base or your levy is pretty steady, but sometimes I know with COVID, there were additional grants that were coming in, so that probably helped offset some of those expenditures. And then your charges for services, you know, that'll fluctuate depending on the need of the residents and how much gets billed and collected during the year. So it can fluctuate a little bit. A few pages later, you can actually see a budget to actual, that way you can kind of see if there were particular revenue lines that did do better, or how you did on the expense side compared to budget.
Well, I know there's a lot of revenue, especially Health and Human Services, that are delayed. And it's going on until after the year is over.
Yeah, a lot of the stuff, if it gets collected, or, you know, the numbers are known by the time we're here in April, there are entries made to kind of put it back so it offsets in the current year. That way it offsets the expenditures to the extent that they're known. For county roads and bridges, you'll see that, you know, revenues were pretty close to expenditures. There was a small increase of about $50,000 in that fund balance. And debt service did have a decrease in fund balance of about $70,000. There was a little bit transferred out. I believe it was to capital projects fund for the $240,000, but don't quote me on that part. But again, there's $7.2 million in fund balance in your debt service fund at the end of the year. Any questions on that page? Page 25, oh, go ahead. Did you have a question? No. Okay, sorry. Page 25, then, again, shows your capital projects fund. This shows where you guys had $5 million in expenses, but you only had property taxes of $1.1 million. So you spent down some of that fund balance, which is, I believe some of that was proceeds from the debt issuance from a few years ago. So, you know, it was going to be designed to be spent on that fund. And so and then all the remaining governmental funds at the end of the year had $1.4 million fund balance. And so that'll be your ARPA fund which has zero fund balance at that, but that's also your jail assessment, library, a few other various smaller funds. Any questions on the governmental funds? Okay, then I just briefly want to touch on the Highway Enterprise Fund and Solid Waste Fund. If you can move to page 32, it's going to be statement of revenues, expenses, and changes in that position. So the Highway Enterprise Fund this year had $7 million of revenues and just about $7 million of expenses. There were some miscellaneous revenues of $100,000 that helped them increase their fund balance by $200,000. So at the end of the year, they had net position of $7.4 million. Solid Waste, you'll see, had a really good year. Operating revenues were $4.5 million, with only operating expenditures 4.2. And then between taxes, sales tax, and just miscellaneous revenues and grants, you were able to increase the fund balance in the solid waste fund by $1.4 million. Any questions on those funds? Okay, are there any other questions on the financial statements? Otherwise, I just want to briefly touch on the couple findings we had and one management recommendation that we had for the county to look into this year. In regards to the findings, two of them are the same findings we've shown for years. One is preparation of this report. You know, for cost benefit purposes, the county outsources the preparation of this 100-page document to their auditors. Not considered unusual. We have counties throughout the state that do that, but it's important to understand that that really is an internal document that should be prepared. And by outsourcing it, there needs to be some controls and other things in place to make sure that there's the footnotes match what your policies say, and that it does align with the way the county is operations look during the year. The second one is kind of similar. It has to do with the single audit report. You know, when you get your federal and state awards, when you send over $750,000 in federal money, you have to have a special report, which is one of the other PDFs that were attached. That report also is responsibility of management to prepare, but they outsource it to their auditors to help prepare. The county does, you know, summarize and gather all the data for us to compile all that data for the grants. But again, just outsourcing it. And that's where it's important just for your oversight of reviewing these documents and asking questions. The third finding we had this year was on elderly transportation. We have to test that grant on the state side at least once every 3 years, based on a risk assessment. And one of the things we saw this year was there were quarterly reports that are always due to the state. And while those reports got reported timely to the state, nobody else reviewed them besides the person that prepared them. And then when we were given the source documentation to look at it, we saw discrepancies. So our recommendation is that before that report gets submitted, those quarterly reports get submitted, somebody else review them just to make sure there's no clerical errors, that the data makes sense based on their understanding of that program. And it's just meant to that extra set of eyes can sometimes just easily catch a clerical error or spelling error, just, hey, this doesn't make sense, and to ask some questions. Any questions on those findings?
So that all went through our financial director, is that, and that took care of it, or where did that set of eyes come from, and where did the second set of eyes didn't come?
That's being worked on between the department personnel that are responsible for the grant, and Kyle's working with them, as my understanding, to figure out where the extra set of eyes should come from, or just develop a process to make sure it gets looked at.
Thank you.
Do you have a question?
I did, but not on that.
Okay,
I want to go back to solid waste.
okay.
You had revenues exceeding the operating expenses. But not all of it was services. The others I would assume would be property tax levy, right? Or-
Yeah, there was, let me just go back to that page, there was about 400,000 of property taxes, that's actually below the line, that's in the middle section. And then there was sales tax, $420,000, and then there was interest income of 63,000, and then you're not operating grants, are gonna be your recycling grants from the state. And then there's, I don't remember exactly what the rest of the miscellaneous revenues were, but so that actually those revenues didn't even calculate into your operating income calculation, because you might not get those grants every year, you might adjust your levy, it's kind of just, as an enterprise fund, you're supposed to make sure your rate that you're charging the customer offset your expenditures, but sometimes you have to use levy or sales tax or grants to help cover those expenditures. This year you didn't, there was, I think if I remember correctly, there was just a thing with possibly with finishing part of the project and another part of the cell, but there was just more activity that worked out.
Mr. Chair, on that same note, where does that sales tax come from? I mean, we,
From the sales tax fund.
for solid waste.
There was a transfer in, right?
There was an allocation in the budget.
Right.
Oh,
Yeah. Speaking of solid waste, so that was the last thing I wanted to talk about, was we did have a management recommendation that with your receivable system, with the billing system, to make sure that there's a process going forward to make sure you're reconciling that system to your Skyward system, because they're two different systems. And it looked like there were times where there was maybe some reconciliation between the deposits that were going over and the billing system, but maybe missing that step to Skyward. Or if it was happening with that reconciliation to Skyward, it wasn't being documented. So that's just our recommendation, is to review those procedures and make sure that there's something documented there. Because if it's basically, the story is, if it's not documented, it didn't happen. It's how you prove a negative. And that was all I had. Any other questions?
Well, you're
I'll
gonna
be
be,
back at county board.
yeah, you're gonna be back at the county board, so it won't be that easy. Yeah.
Otherwise, my contact information is available. If there's questions, let us know.
I do have a question. You said those two internal reports should be done. Our people, but they give them to the auditor. How much do those cost a piece? Can you price that out differently or no?
It varies, because some of the ways that we've designed, some of the way our work papers are, is to gather the data as we go, kind of thing. And then even the way our software works, we have things that are mapped out that allow some of the data to automatically fill in. It varies also. I mean, don't get me wrong, there's softwares out there that do kind of allow you to do some of the schedules and different things. if you went that route or just, but sometimes it comes down to, it's more just, even just all the footnotes that end up being the true time saving part of it, because it could take your team, one person, 40 hours to prepare this, and there's likely chances you have better things for that person to do with those 40 hours.
So regarding your report, at one time, we had some areas that needed a lot of improvement. I guess that's a kind way to put it. Did you find anything? I mean, find anything that we need to improve on other than what's in the footnotes? And
The biggest thing this year was that solid waste receivable thing, and nothing was enough beyond that to require us to put it in the document. The county's worked hard the last few years to try and adjust things and make sure enough eyes and everything's reconciled before we start the audit, which does help. And every year is different, depending on where it goes. Or even your activities, we may have different comments next year when we get here, just because, you started the airport project, maybe we're looking at questions related to that, or, anything else that can change, or even just this year more with spending more of ARPA, we may have more comments or questions just because our testing does change from year to year as well. We don't always look at the same departments every year unless there's something significant that could impact the financial statements.
on that same note, then, was our staff and employees pretty well prepared for you guys before you got here?
Yeah, I think-
One time,
I know the last few years, obviously with COVID, it kind of threw us all into a thing, but I feel that everything's worked out pretty well. We do a lot of stuff electronically to save time for both parties. And responses to our questions get answered pretty well. And then when we have to come on site, we come on site and work through and get our answers. And I appreciate everything that they get ready for us and the answer and being able to work through everything. I will say, even some of the new accounting standards that have come into play these last few years, the county implemented leases 2 years ago when ahead of time. Technically those didn't have to be implemented now until 22, but the county was proactive enough and led that internally to get that implemented. So that's a big step compared to where other counties didn't do that, and they're still just now learning to implement that.
well, it sounds like it's positive, we appreciate that.
Well, thank you.
Thank you.
Next, we have the treasurer's report.
Any questions? And the numbers are going up yet still, which is good.
Okay, seeing no questions, we'll move on to resolution to designate public depositories and authorization of disbursements of county money.
This is just updating the one that we have. We added the PMA US Bank that we were just authorized to utilize.
Rick P. Solomon.
Second.
Motion by Rick P, second by Scott P to move the resolution forward, county board. Any discussion or questions? Seeing none, all in favor, signify by saying aye.
Aye.
Those opposed, signify by saying nay. Okay, resolution, we'll move on to county board next. Tax correspondence.
This is another one that we've had over the last couple of months that is requesting an option to offset the penalty part.
Rick P. make a motion to deny.
Okay, motion in a second. Any further discussion? Okay, all in favor, signify by saying aye.
Aye.
Those opposed, signify by saying nay. That motion passes. Motion denied.
Mr. Chair,
Yes,
just a quick question for Janny. You think it's wise that the statement was made that you could make a one-time exception?
That's what she's asking.
Okay, when I read it, I thought it was that she was told that it's a possibility.
We cannot answer yes or no. So we always keep it open as a possibility. They have this option to come forth with this letter to request that from you. So we can't answer that. We don't say yes or no.
They
just give that-
inquire to you, what else can I do?
Correct. And we give them what their option is, and if they choose to do it, they can. Well, we can't say absolutely no, you can't have that. So
Okay, thanks, Jen.
Okay,
thank you.
next we have IT Director's Report.
Morning, everybody. Are there any questions on the Sun's report?
It went back in.
Okay.
Thanks very much. Health and Human Services. Human Resources. That's all right. You know, when I thought you were in there.
Good morning. Are there any questions on my report?
Why not? Supervisor Brady.
Thanks, Mr. Chair. Michelle, I noticed there's, I don't know, say the lion's share of these are coming from the sheriff's department. I don't know if that's accurate or not, but it seems like there was an awful lot of them. How are we doing as far as getting some of those things filled and maintained?
Actually, we're doing pretty well in the sheriff's department to get them filled and maintained. A lot of these that you're seeing are eligibility lists. So what we do is we do an eligibility list, because the background takes so long. So they're backgrounding, and while they're backgrounding, we could have a full staff in the jail. But since they're backgrounding, it's getting ready to fill a position if a position opens, because it does take a couple months to background.
Thanks.
Supervisor Scott, please.
I guess I haven't been on this committee long enough. Are any of these new positions coming on within the last few months? Like newly generated ones, I guess, not existing ones?
No.
Thank you.
No other questions? We'll go on to Court Counsel's report.
Good morning. Any questions on my report?
Ryan, can you scroll down? Mine was on the highway committee, the legal opinion on the maintenance of the newly installed sidewalk and multi-use trail. Is that who's going to maintain it, either the county or the state, or?
Yeah, that would be for the county. It's on the Highway Z project, I believe, and then it would be who has to take care of snow removal or if there's any maintenance on it. And at this point in time, it would be the county.
Okay.
Okay. Thanks for the report. County Clerk's report.
Any questions?
Are you doing poll workers for next month?
That's actually at the municipality level.
But I have not heard any of them have any problem.
Diana, keep the scroll down. Mr. Chair,
Yes.
I guess I'm not privy, can you mention what you've been inundated with open records requests?
Jeff has been helping with them and they are in regards to the November 2020 election.
Are they all pretty much the same or they're all over the board or?
A lot of different varieties of reports that they're requesting that we run.
Okay,
Can I ask what our response time is, Mr. Chair? Sorry.
Some of them we have not been able to answer yet, and some of them we can answer on the same day if we haven't been running the reports. And then the difficult ones Jeff has been helping us with.
Supervisor Grayson?
Just a question for Diana. Are we looking okay with the new voting machines before the November election?
They arrived here at the county on Tuesday or Wednesday. Maintenance, the sheriff's department and IT helped us get them in the building. And we are waiting for ES&S to come and program them, and then we will be giving them to them hopefully before the end of the month.
Supervisor Scott, please.
my last question here on that, not on that subject, but it says the ballots won't be destroyed from the November 2020 election. Will they eventually be destroyed or are we holding them for a reason?
We took that question to legal counsel and Jeff said that we should keep them at this point in time. And the state has not answered anything in regards to that because a lot of county clerks are asking that question because a lot of people pay for storage. And so it's not in their budget for 2023. For us, we just have it in our back room, but we'll wait for answers and Jeff is staying privy to it.
Thank you.
Okay, seeing no other questions, we'll move on to county manager's report.
Thank you, Mr. Chair, and good morning. So start out with appreciation to Dustin Grant and Land and Water team. And that team is made up of Carolyn Raleigh, Hannah James, Charles Bilski, Megan Stokelberg, and Kyle Kettner. And what's coming across here is just a special thanks for the great customer service in that area and also the high quality of work. As it relates to capital projects, Bill is still working with the doors. He still anticipates that this project will be done by the end of the year. HVAC controls, we are currently replacing, I say we, but it's Bill in his department. Replacing the pneumatics with the new digital system, and this project actually started late September. As it relates to the fairgrounds, projects are in the works for next season, and he is also currently winterizing everything. Related to the boardroom, this is the audio visual. This is in Rich's area, and if you would have seen this in his report that he's anticipating that project to be done by the end of November. Here now, but and on page 2. Veterans Memorial still anticipate completion before the end of the year. County Highway M. I sent out an email to everyone letting you know that the infrastructure BIL funds are no longer available to us. The next step now is to present funding and project bid process to the Highway Committee. County Z, we anticipate completion by October 14th, so nothing has changed from prior month. On that reporting, under happenings, we did have a courthouse security assessment field work begin, and the official report is forthcoming. Underneath that is the department head retreat. I provided some pictures here to kind of show the activities. It was a beautiful day and to me a successful event. We reviewed information from the board retreat related to board priorities and came up with ideas for measurable goals. And we're going to address those priorities and update the strategic plan to reflect it. And if we go on to the last page at the bottom, I mentioned that I attended the economic development meeting. And during that meeting, it was mentioned that there's a housing developer finishing a phase 3 project in Rome, and is interested in potentially looking at some parcels here in the city of Adams. So those discussions continue. Rome has experienced a 7.19 growth. Jamie shared that with the group. And also Jamie shared that the tax incremental district up there that was due to mature in 2032 may move up in the timeline to 2027. So that is exceptionally great news. And with that, I conclude.
Very direct meeting. Oh, super direct meeting.
I want to know why, Diana is trying to push that person over in that picture.
That's actually my favorite picture. It was fun.
Super staff needs.
What is the criteria that it moved up so fast? They paid the money of the tax incremental.
Mr. Chair,
Yes.
my understanding is that when you have success in development and it takes off, that's, I mean, you fulfilled your mission as far as that goes. And perhaps they're getting full, right? There's only so much development within a certain parameter or diagram, you know, whatever the outlay it was for the district. So
So who determines that?
I believe they have, I'm gonna guess, I think it's Ellers that comes in and kind of analyzes all of their data. And they're the ones that will recommend a
Okay.
potential early term.
Right, I think I remember going to the original ones that with the others that did that, and they had the project improvements, and then as they get the tip money from the collection of the taxes, then it pays those improvements off, so.
That's very good news.
Supervisor Kowarski.
Thanks. Project M, did they give a rationale or a reason why it was denied?
Mr. Chair,
Yes.
sorry, I was shaking my head, but I should probably answer that. No. No, it's frustrating.
Supervisor Caplan.
To me, it looked like they prioritized bridge projects. I mean, that's just me, what I personally saw.
Bridge.
Like bridge project. Bridge. Like 82 bridge or 21 bridge.
Did you get it? No.
Mr. Chair, I would like to share with this group, there may be concern about, potential, we were hoping to save money, with this project, but we are currently looking at other ways to fund it. We're kind of putting numbers together. Hopefully we won't have to go into so much debt. Is the message.
Is that because of the higher interest rates currently? Or?
Mr. Chair, actually, the rates aren't too bad right now. So if we were to go out to debt, it's not, I mean, it's more than it was, right? When we first looked at this project, rates have gone up since, but I believe we have some reserves. As mentioned in the audit report, they touched on highway having this, I'm going to say it's like roughly $700,000 or $800,000 in their area as it relates to grants that are unused. That was one area. So right now we're looking for all these pieces of, these funds that we may be able to apply for the project. We are in discussions. When I say we, it's Kyle, Pat, and I are in discussions about trying to put some ideas together for highway committee. So if you are interested in potential ideas for the funding and the project itself, please attend that next meeting.
Supervisor Caplan.
If you go on and look at the highway agenda, he explained maybe some of those different avenues in his agenda.
Mhm.
Okay. And then, project status report. I was going to cover that.
Yep. Can everybody hear me? I got earbuds in.
Yes, we can hear him.
All right. Are there any questions on the project status report?
Any big changes you would highlight?
I just added this on this morning. just so that way you guys are aware, printer and copier device consolidation and contract review and renewal. Me and Rich are working on that with our current print service vendor, which is Marco. So we did a walkthrough with them in September, and then they're planning to have a proposal to us next week.
Mr. Rich, please.
So it says 150,000, but I take it that that would be trying to reduce and save money.
Yeah, so a lot of the devices are older. They're not able to support them, so we are going to need to upgrade a few devices. But they're also at the same time going to look at reallocating devices depending on how many print jobs they have. They have meters that say how much the devices are used. So depending on if it's a low utilization, they will then reallocate it to some other department potentially. We did this 5 years ago, and I believe we ended up leasing the printers, and it was roughly about 150,000. So 150,000 would probably be the top end because the prices have come down on those devices, I believe. So we may end up just purchasing the devices though outright this time rather than financing them.
Rick Beach.
I know we're working with Marco. Is there a reason why we're not out for bid on something like this?
Yep. So the devices that we have, they're all Konica Minolta devices, which are Marco supports those types of devices. There are other vendors out there, but they do not support these Konica Minolta devices. And there's a high likelihood that we're not going to need to replace all of the devices, and we're still going to have some of the devices, I believe. Rich, did you want to correct me if I was wrong there? Does that sound accurate?
He's not here right now.
Oh, okay.
Mr. Chair,
Yes.
I do offer to defer back to Rich's report. I do believe he touches on this particular item with Marco.
Any other questions? Yes. Supervisor Reed.
I guess when I hear that no other company deals with those type of products, I worry that that's one way how you get around the bid is you use something that nobody else has. And I would have been interested to see if somebody else would come in and offer us a lower price with different machines to see if there's something else they're competitive, and then we could be more competitive in 4 or 5 years after we sign the next contract. I mean, I just think that that's just a way to get around to be the only vendor. Thanks.
Okay. Then we'll move on to the ARPA work group report.
Mr. Chair.
Yeah.
I do want to point out on the bottom of this, we added another tab. We're potentially receiving another $100,000. It's part of ARPA, but they called it Local Assistance and Tribal Consistency Fund. So I believe Cynthia just signed the paperwork yesterday for us to receive the first installment of about $50,000.
What are the parameters of this? Are they the same as the ARPA work group, or?
They are very similar, I believe. We haven't had a chance to review all the documentation related to that, but there's requirements for filing and everything for that.
Okay, maybe when you get that, you can let the committee know. So register copies.
I know it was brought up last time. Is there a separate list of projects that we have put off to the side that we aren't agreeing to, but with the time's running out that we're gonna re-look at those projects? I don't know, Cynthia or Kyle.
Mr. Chair,
Yes.
what I can offer is that what's on your screen right now, these are ones that we have turned down, or the Arpa group turned down. I can let you know that there's a lot of things in the pipeline right now, which will probably drain the rest of the reserves. There's a couple.
Well. Mr. Chair,
Yes,
I don't, I don't agree with that for the basic fact that it's kind of like saying we're gonna agree to those and we haven't even seen them yet. I know a couple projects that people are gonna want that, might be more important to the ARPA, committee or the county board that should be taking a look at it also before we, expend all the money. Just a comment.
yeah. Supervisor Kowarski and Supervisor Bailey.
Scott, has it been brought up? Has it been presented to the ARPA committee?
It is now, but I just got an email yesterday on one of them that, will be coming.
Okay. That's, I mean, that's the avenue they need to go.
Supervisor Bailey.
Just wondering if it's possible that any of that ARPA money be swung towards the Highway M project?
And I know that's one thing I brought up, and when I talked with Cynthia this week, to maybe look at that since the funding's not there. Go ahead, Cynthia.
Mr. Chair, so as it relates to infrastructure, usually it's water and sewer. When it comes to roads and bridges, it's a little bit more challenging to get it approved through ARPA. Those projects are, as you know, are very expensive. So yes, we're kind of looking into that right now, but again, there are a lot of things in the pipeline getting ready to be presented for ARPA funds. So maybe the one that's mentioned here on the floor is one of those that I'm aware of. I hope that I'm aware of it, right? I hope that I'm aware of it by now. Anyway.
And I mean, talking about the county M project, that won't be slated until 2023, right? So, right. Yeah. So I mean, it won't start till next year, but I mean, and I think the consensus is that it'd be better to do it all at once instead of do a mile a year for the next whatever year, so. But the efficiencies with the vendors that would do it and, you know. So I guess maybe we'll know more in the next couple of months, so where we're sitting with the ARPA funds and can we use that for hospital funding, county programs. Okay. Next item is Kyle's 10-minute presentation on the budget.
No questions. 10 minutes.
But you got a timer on it.
All right, can everybody see that?
It's not on the screen here if you want to put it on.
What was that?
It's on his screen. No, it's not on the screen, it's on there, right?
There's
Yeah.
nobody in
Yeah. Okay.
Yeah. All right. I'm sorry I couldn't be in person.
here.
All right. So first, we're just going to start off with a statement that the budget is balanced, and then just some general housekeeping. If everybody could just please make some notes of your questions that you're going to have, and then we'll field the questions at the end of the presentation. If you need me to go back to a particular slide to help with your question, I'll do that. All right. So first, we're going to look at what the timeline looks like for the budget, and so as early as May is when the budget process begins. Departments that have capital budgets are provided with the capital worksheets for them to review and update. In June, the Administrative and Finance Committee sets the budget direction. Typically, this is directing departments to maintain their levy ask at no increase and to set what the wage increase will be. Retirement rates are set by the state and insurance rates are set by our insurance provider. Department heads are also given budget instructions, packets, and supplemental documents to assist in developing their budgets. During July and August, departments are asked to complete their requests. This is just putting in their asks for their budget, filling out the numbers. In September, we hold meetings with each department head, the county manager, finance director, and human resources director. These meetings are to evaluate the departmental ask for their budget and to determine a methodology for budgeting expenses and revenues. We'll typically look at using a 5-year average of actual expenses and revenues. By October, it brings us to where we are now. We're giving a budget presentation to highlight major changes in the 2023 budget. So first, the presentation is given to admin and finance, and then to the county board. At the November county board meeting, we then adopt the budget. Along with budget adoption, we also have to complete apportionment worksheets. The apportionment worksheets are due to the state by November 15th every year. This year, November 15th happens to fall on the third Tuesday, which is the regular board meeting. Most years we end up having the November board meeting a week early to allow for timely filing of the apportionment worksheets. All right, so the county tax levy, excluding adjustments for the library and county road and bridge aid, is $18,540,838, which is an increase close to about $500,000. The library tax levy is $494,965, which is an increase of $14,541. So as we have a county library, municipalities with their own public libraries are exempt from the library's portion of tax levy. So they don't have to pay that $494,000. So those municipalities are the town of Rome and the city of Wisconsin Dells. The county bridge aid levy is $5,212, which is a decrease of $8,621. This levy is derived from the petitions received from towns for the construction or repair of bridges or culverts. The highest it has been in recent years was in 2015. It was just over $100,000. Sometimes the projects come in under what the town petitioned the county for. In those cases, the fund balance is applied for any future petitions. The county has received one petition in 2022 from the town of Preston. And similar to the library tax levy, there are municipalities that are exempt from this portion of the levy. So the cities of Wisconsin Dells and Adams and the village of Friendship are exempt from the county bridge aid levy. Debt service levy is maintained at the same level. In the past, the county has levied $168,130 for debt service levy. This levy is exempt from levy limit laws. So this equates to a countywide mill rate of about $5.62 per $1,000 of valuation. The mill rate will fluctuate based on the municipality. What the mill rate means is that for every $1,000 of valuation, the county receives $5.62. So someone with a $100,000 home will have a county tax portion of about $562. Remember, those are the county taxes only. There's other taxing entities on a tax bill, such as the local school district, technical college, and the town, village, or city. We're going to cover historical mill rates later on. The county's net new construction was 2.832%. The net new construction is essentially how many new structures were put on properties to add value. This is a number provided by the State Department of Revenue. This number is important as it is how much we're legally allowed to raise the tax levy. As stated earlier, there are items that are exempt from the amount we can raise, which would be the library levy, debt service levy, and the county bridge aid levy. While there may be a dollar amount increase in tax levy, that does not mean that the mill rate will increase. The mill rate is actually decreasing by roughly 72 cents and will be below $6 for the first time since 2008 tax bills. The mill rate decreases while the dollar amount of levy increases due to the large growth of equalized value. In fact, the equalized value is actually over $3 billion for the first time ever. So the county's total tax levy will be $19,209,145, and this is a total increase of about $517,419. All right, so this is just the detail from the state for the net new construction in all municipalities in the county. So you can see the net new construction from the report was 2.83%. This is the average across all municipalities, and it's a weighted average using the equalized value. The town of Rome is the only municipality to exceed the county-wide average at 7.19%. You'll also see that the town of Leola had a negative adjustment or negative net new construction. I guess we're just kind of assuming that some structure or structures were torn down and the other new construction was not enough to offset those structures. All right, so this first graph is just showing the equalized value going back to 2008. So you can see the value plateaued between 2008 and 2009 and then had a steady decline up until 2013. From there, you can see a steady incline up until 2022, where we had a rather large increase. So this could be an indicator for a potential downturn in the economy, similar to the housing crisis in 2010. A lot of this equalized value is primarily due to the town of Rome. The town of Rome is the only municipality to have net new construction exceeding countywide average, as I stated earlier. So this next graph, this shows the mill rate. So the mill rate is essentially the inverse of the equalized value. So you can see where the equalized value had its valley back in 2013 right here. That's where the mill rate had its peak. The mill rate has been steadily declining since 2013, with its largest decrease being for the 2022 tax bills payable in 2023. And finally, this last graph shows the amount levied for the 2023 budget, and it goes back to 2009. So while there's an increase in levy, there isn't as sharp of fluctuations like you see in the prior graphs. The burden for the tax levy increase shifts to properties that made improvements in the year, which then increases their property value. Okay, so what's in the budget? The salary schedule has been aged by 4%. So this means that there is a 4% increase in wages. This is a standard adjustment to account for inflation. The county typically uses the Midwest Consumer Price Index, or CPI, year-over-year increase for the month of April to adjust wages. So April of 2022 had a CPI increase of 8.6% compared to April of the prior year. So we're currently behind the CPI trends. Just to provide a visual of the Midwest CPI and wage increases, here's a graph showing cumulative wage increases on the blue line here, going back to 2018. And then you'll see the Midwest CPI on the red line using April as the measurement month. So you can see that with the 2023 budget year, there's a large gap due to the sharp increase in CPI from April 2021 to April 2022. The Wisconsin retirement rate system rates, or WRS rates, are increased by 0.3% to 6.8% for general county employees and elected officials. And then the rates increased 1.2% to 13.2% for protective employees. That's mainly Sheriff's Department deputies. So you can see the rates here. This is directly from the WRS website. So this top one is general, county, and elected, and then the bottom one is protective. All right, the insurance renewal with Group Health Trust increased by 5%. The county's responsibility for a single plan is $612.51, and a family plan is $1,619.01. The county covers 85% of health insurance premiums. So the impact for an employee on the family plan is $13.58 per month more in costs. For an employee on the single plan, the increase is $5.12 per month. So it's also important to point out that while salaries are increased by 4% and health insurance is increased by 5%, this does not necessarily mean an employee is making less money. So ignoring all other variables and just looking at the cost of living increase and the insurance increase, we can run a hypothetical of an employee making $40,000 in 2022. They'll then be making $41,600 in 2023, so an increase of $1,600. The annual increase due to the family health insurance premium would be $162.96. So an employee would still see a net wage increase. So for this example, it's roughly a 3.6% net increase. We're taking a new approach on replacing the fleet vehicles. I believe we've talked about this before, and we'll be trying to replace them every 2 years. Currently, with supply chain issues, this may prove to be difficult. However, by utilizing government rates on vehicles and selling them after only 2 years, we can accomplish two things. We wouldn't need to perform as much maintenance on them, and the resale of the vehicles could be equal to the original purchase price of the vehicles. So our intent is to lessen the dependence on the levy and fund the vehicles through purchase and resale. We have a planned spend down of the general fund unassigned fund balance budget. The general fund unassigned fund balance is approximately 50% of 2022's budgeted expenditures, or around $7.7 million as of 12/31/21. And Amber kind of went over that earlier in her audit presentation. So the Governmental Financial Officers Association, or GFOA, they recommend an unassigned fund balance of approximately 2 months of expenditures, or around 16%. Our fiscal policies state an unassigned fund balance of 15 to 20% is the minimum required. So we're looking to get the unassigned fund balance to around 30%, or about $4.7 million. In the departmental budgets of the general fund, there will be fund balance applied as a funding source. So it's going to be showing up in revenue, and then transfer to capital project fund as the expenditure for any departments that have a capital project fund. So we're funding the capital projects through the unassigned fund balance of the general fund. And going forward, we're going to continue to assess the unassigned fund balance as a source of funds for capital projects. Should we not have enough unassigned fund balance in excess of 30% of the general fund expenditures, we will look towards the debt service balance as a source of funds. Debt service will have county sales tax dollars in the fund balance. All right, so going over the fund balance a little more detail here. This first graph just shows the general fund expenditures from 2013 to 2022. General fund expenditures are what we use as a measurement against our fund balance. So then this graph shows general fund unassigned fund balance over time in the blue here. So horizontal axis again is the year ending, and the blue area represents the dollar amount compared to the red area of total general fund expenditures. For the year ending 2021, you can see there's approximately $7.7 million in unassigned fund balance. From 2018 to 2019, there was a large decrease in the unassigned fund balance, and this is due to a transfer to the building project fund in the amount of $5.4 million. So there's that sharp decrease right there. And then looking at the general fund expenditures, you can see there is a fairly significant decrease from 2017 to 2018. In 2018, we created capital funds and shifted those general fund expenditures to the capital funds. All right, so now we're going to move on to the percentages of the unassigned fund balance, because percentage is kind of our measurement as well. So you can see again a sharp decline from 2018 to 2019 due to the transfer to the building fund. The fund balance has been climbing steadily though since 2019, and the minimum required fund balance for county policy was 18% in 2013 and 2014, and then 15% thereafter. So this budget will be spending down the unassigned fund balance by making transfers to the capital project funds in the amount of roughly $2.3 million. And this would bring the fund balance to around 34% of general fund expenditures. And just overlaying what our policy requirement is, and that's in red here. That red shaded area is the policy requirement. So we're still going to be about double the policy requirement, or the minimum policy requirement. All right. So moving on to staffing changes, we're going to first cover staffing changes within the general fund. So within Clerk of Courts and Register of Probate budget, there were some changes to help accommodate the additional need due to having 2 judges and to help with the department's request of having an added position. So we're adding a full-time position that will serve as the Clerk of Juvenile Court. This is the position that there was a budget amendment for last month, I believe, and is funded through Tax Levy. We're eliminating the part-time clerk typist position in the community service program. And the last change in the Clerk of Courts department is that we're reclassifying the full-time community service coordinator position to a Clerk of Courts deputy position. The Parks Department is adding a full-time assistant park manager position for Petenwell Park. This is to help accommodate for the increase in visitors and other maintenance items due to finishing up the west expansion area of Petenwell Park. This position will be funded through the park's revenues. The Parks Department is not on the tax levy, and they only use a small amount of sales tax for capital improvements. Most county parks are on tax levy, but our parks are so successful that they don't need tax levy to fund them. The parks actually generate an operating profit and transfer their profits over to their capital fund. In UW Extension, the part-time clerk typist position was decreased to 1,040 hours from 1,170 hours, so just a decrease of 130 hours. And then moving on to the Health and Human Services Fund, there's an added behavioral health therapist position to help with the increased need for mental health services within the Comprehensive Community Services Program, or CCS program. This position is not supported by tax levy. This position will be funded through Medicaid billing and Wisconsin Medicaid Cost Reconciliation, or WMCR. The part-time public health support specialist position has been eliminated through attrition, and the job duties have been absorbed elsewhere within the department. And the solid waste department is eliminating through attrition a full-time equipment operator / truck driver. This is based on efficiencies that were gained by moving to carts and automated trucks. All right. Now we're just going to cover some budgeting changes. First, within the general fund departments, as a lot of these are just combining and simplifying the budgeting process and to help accommodate structural changes within the county. So planning and zoning had a couple of changes. Rather than being listed as their own departments, the surveyor and GIS budgets have been moved under planning and zoning. They're still broken out separate from the other areas covered under planning and zoning. The only change is the department code used in budgeting. In Clerk of Courts, we're combining a few departments. The Register and Probate and Family Court Commissioner budgets were moved under Clerk of Courts budget. It's similar to planning and zoning. You'll see these broken out separate from other areas in Clerk of Courts. The only change is the department code used in budgeting. Within Human Resources and the County Manager's Department, the confidential administrative assistant is budgeted entirely in Human Resources rather than split. There's no significant differences with how the position is utilized. It's just cleaning up the budgeting aspect of the position, as both departments fall within the general fund. In the solid waste fund, we're just combining 3 different cost centers into one, as they are not truly different. Those 3 cost centers perform essentially the same functions using the same staff and the same equipment. The shop services, mainly the equipment used in those cost centers. So those 3 cost centers are waste collection towns, garbage / refuse collection, and shop. All right. And next, we're going to cover the capital projects by department. We're just going to go over major projects planned for 2023. For any planned projects beyond next year, please refer to the capital project worksheets that will be located towards the back of the budget book when available. Capital items are larger costs that fall outside the normal maintenance of facilities and grounds. Capital project worksheets have also been provided to committees at their October meetings. And the total spend across the entire county is roughly $16 million, most of that being with highway. So within the maintenance department, we plan to replace all 3 vehicles. One vehicle is an SUV for servicing outlying departments, such as highway and solid waste. The other 2 vehicles are trucks, one with a plow. We're going to replace the courthouse and law enforcement center roofs. The estimate for the roofs has increased drastically over the past couple of years, and we have adjusted the capital budget to reflect this. Chip sealing the community center parking lot. This is just a regular maintenance item. However, it is a large expense, close to $200,000, that will further the life of the parking lot. We're going to upgrade the lighting at the fairgrounds to LED lights. There's a number of other smaller items at the fairgrounds, but that's going to be addressed through the maintenance department's operating budget. The sheriff's department will be replacing 5 squad car radios in 2023. This will be an ongoing schedule until all 33 radios have been replaced. The radios have a lifespan of roughly 10 years. The upgrades to the dispatch phone system will be mostly funded through the Next Gen 911 grant. This is related to the resolution that was passed earlier this year, designating the Adams County Sheriff's Department as the 911 answering point. The Sheriff's Department will also be replacing some vehicles, and typically every year they replace 4 squads and 1 administrative vehicle. Within emergency management, there's going to be some major upgrades to the radio communication channels that will move all encrypted transmissions and will increase channel capacity. And as part of a potential cost saving initiative, we kind of touched on it earlier in the project status report. But we're going to be looking at renewing our managed print services, which will entail replacing most devices and consolidating the devices that are infrequently used. HHS will be replacing all 10 fleet vehicles in 2023. Again, this is a possible cost saving as the purchase price of vehicles is discounted for governmental entities. And when we resell the vehicles after only 2 years of use, we sell for close to the purchase price. As mentioned before, we essentially use the vehicles for 2 years and only pay for maintenance and fuel. The parks will be replacing 3 trucks in 2023. Castle Rock will be adding a new shop building for storing and maintaining equipment. Pete and Well will be continuing the expansion project that they started this year. This will be adding water and electric to sites that do not have those amenities and building a dump station on the western expansion area. Both parks are going to be replacing vault toilets with new prefab vault toilet structures. And there's going to be construction of erosion control measures at Sherwood and Camelot boat launches. And Pete and Well Park will be blacktopping about $250,000 worth of roads in 2023. And this will be just to replace the existing blacktop that is deteriorating. All right, moving on to land and water. They're going to be replacing 4 vehicles in 2023 and will continue replacing all 4 vehicles every other year. There's some major repairs also needed at the Cottonville Dam at a rough estimate of about $250,000. So this is worked into the capital budget. These repairs were identified through an audit conducted by the state. And this was discussed at the October Land and Water and UW Extension Committee meeting, which is available on the county YouTube page if you want to hear more details on that. Planning and zoning will be replacing both of their vehicles also. I believe this is the last slide here on capital projects. So solid waste will be purchasing a split body automated truck. This is going to allow them to pick up garbage and recycling from the same vehicle rather than sending out 2 vehicles, one for garbage and one for recycling. They'll also be finishing up the necessary permitting and engineering for the vertical expansion of the landfill. This is not going to make a larger footprint of the landfill, but will allow us to fill vertically. And the highway department is the last department we're covering. So they're going to be seal coating approximately 12 miles of county highways. They also plan to mill and overlay about 1 mile of County Highway Double C and just under a mile of County Highway Double X. County M is still planned to be started in 2023. This will be accomplished through possibly an issuance of debt and utilizing fund balance from the highway department. We're still kind of working through the funding mechanism, but we have it in the budget as a debt issuance, worst case scenario. The highway department also plans to replace a tractor, a boom mower, and a pickup in 2023. And furthermore, they plan to replace the salt storage roof at solid waste. And they're adding a few pieces of equipment. They plan to add a trailer and then a vacuum trailer for pumping out the storm sewer at County Z and the wash bay. Okay. Now, this first chart is just showing where all the revenue sources are coming from that are in the countywide 2023 budget. So this is all the different funds. So the general fund, highway, health and services, solid waste, etc. All of their budgets combined in here. So you can see that property tax levy accounts for the greatest share of funding sources at 25% of total revenues right here in this blue slice. This is followed by intergovernmental charges, which are charges to other governments for items like road plowing and garbage collection. That's just under 20%. So that's right here. And next is the other financing sources category at around 16%. For the 2023 budget year, this is mainly going to be transfers from the general fund and the proceeds from debt issuance for the highway department. The percentages on here, they don't add up to 100% due to rounding. It's like 0.01 off just from rounding. This chart's similar to the previous one. This one shows the expenditure categories countywide. So the largest spending category is in public works at just under 38% of total expenditures. And this is due to mainly the larger budget with highway and the large projects they're completing, such as County M. The solid waste department also falls into this category, along with some smaller spending categories, such as the airport. The next largest category is health and human services at just under 18%. This category is not only health and human services department, but it also includes certain expenditures from the sheriff's department and the veterans services department. Later on, we're going to be showing each department's levy dependency. Again, like the previous graph, the percentages don't add up to 100%. It's due to rounding. So this bar graph is showing a comparison of 2022's countywide budgeted revenues versus 2023. So 2022 is the blue bar, 2023 is the red bar. On the left side is the dollar amount, and on the bottom just shows what category each bar represents. So you can see a large jump in intergovernmental charges from 2022 to 2023. The large jump is due to increased anticipated revenues for the highway department. And then further on to the right, you can see large jumps in other financing sources and fund balance applied. This goes back to how we're utilizing the general fund unassigned fund balance in the 2023 budget. And this last bar graph shows the comparison of countywide expenditures from 2022 to 2023. Once again, you see a large category of public works, much of which is attributed to the County M project. All right, so circling back to the overall property tax levy, if you recall, the property tax levy was roughly 25% of total revenues. And of the total property tax, around 60% is in the general fund, followed by 18%, just under 18% with the highway department right here, and then about 16% with the health and human services department. Percentages don't add up to 100 due to rounding again, and this one is unlabeled, so a very minor one. So as the general fund is the largest category for property tax levy distribution, we further break down which departments in the general fund the levy is used for. You can see the majority of the tax levy goes to the sheriff's department at about 54%. Not all these slices are labeled with percentages, but the larger ones are, and you can kind of see where those are all at. So the majority of general fund levy goes to the sheriff's department. And that is pretty much it with the presentation. So the budget books are going to be available by November 4th electronically. And just reach out to Cynthia if you have any questions or concerns about the budget. All right, I'm sure there's a bunch of questions.
So where's the varsity?
Hey, Carl. I jotted down a few of them.
Yes.
You talked about solid waste. One of them, you were eliminating a driver. And I'm not sure how that all fits in, driver and something else. So did that come from the solid waste as a recommendation or what?
Yes, that is something that we had discussed with Charlie, and he was under the agreement that we can eliminate the position. There was a driver that had retired, so they're just not going to fill that. And he communicated that over to human resources.
Okay, and then also solid waste talked about moving them into one category versus three. Now, would there be subcategories in there that you can keep track of what's going on in each one?
Well, so those categories, they're really not truly separate. So the waste collection towns category, that was just kind of tracking when people would go out to the transfer sites. But really the transfer sites should kind of fall under the same category as garbage/refuse collection because it is what they're doing. So like if a private resident needs a 30-yard dumpster, that's where the costs are going to be, is garbage refuse collection, not under waste collection for the towns. So they're just kind of combining it all there. And then the shop services mainly those trucks. So all those costs are associated with mainly those trucks because the bigger equipment, I believe they outsource a little bit of that.
Well, my concern is we're dealing with a department, meaning solid waste, that is struggling to show a profit. And, I think it's extremely important that we keep track of where our losses are coming from and where our income is coming from, not only income, but net income. There's also, you talked about landfill expansion. I suppose that's in the works, but until we get a report back from a consulting firm, wouldn't we be better off to kind of hold off on that?
Mr. Chair,
Yes.
is Charlie on? No, I don't see him on here. Well, so with the landfill expansion, that's something that was started, the permitting process, I think, actually started late 2021. It's just a vertical expansion. Most of the cost is going to be associated with permitting, because there's no really construction that they have to do. And that's just so that way we can extend the life of the landfill. I think they have about 4 or 5 years left on the cell 5 expansion at current volume.
I was concerned that we don't know what's gonna happen as a net result of our consulting firm advice, but I was a little concerned about that. Couple more things, just I'll make it quick. Vehicle purchases, you're planning on getting the original money out of them after using them for 2 years. I do have been made aware that there's a sheriff's vehicle sitting at AF Motors, still waiting for parts to come in and engine and et cetera. So that's probably not a bad idea to keep updating these things. And one other thing was on the capital projects, the Fairground Drainage. We didn't get it done this year, at least not to this point, but I would assume that's being addressed.
Yeah, Mr. Chair.
Yes.
Yeah, I believe Bill is addressing that. He had some survey work done this year. For next year, I believe he is working that into his operating budget.
Okay, and that's in the capital projects, is that correct?
I don't believe that one is, no.
Okay. All right, I got enough questions, thanks.
Supervisor.
Yes, Bob kind of took the wind out of my sail on the same thing on solid waste. I also am concerned about, combining those categories together when we really do have to look at what's going on in solid waste with this new study. And again, the fairground drainage, I was going to ask that same question, but Bob beat me to it.
Supervisor Rick Pease.
I'll go for it. After hearing the audit report and then listening to this, I was under the assumption that solid waste showed a little bit of a profit this year based on, and now I see that in one of his graphs, it says solid waste is 2.76. We'll be using that as part of the levy. Is that the way I interpreted that, or am I wrong?
Mr. Chair,
Yes.
I'm going to scroll forward to that graph so we can reference that here.
I guess the reason for that question is if it showed a profit last year, why does it need to be on the levy this year? I guess that's the overall question.
Yeah, so a lot of the profit, there was other funding sources. So there was about $420,000 in sales tax. There was tax levy in there. There was grants in there for the recycling grants. So there's other items in there for the solid waste department that really an enterprise fund shouldn't have, like this, the tax levy and the sales tax mainly.
Yeah, that's my point. I really would like to get off the levy. I guess that's why. The second question is, I love the idea about replacing these vehicles, but when I sit on Health and Human Services and we've been waiting for vehicles for over 2 years, I don't know how they're gonna get 10 this year. They've been waiting for 5 vehicles the last 2 years. if I'm not mistaken. So I worry about that part of replacing the vehicle. You also said the parks are getting sales revenue. Why? Shouldn't they also be an enterprise that should be needing sales revenue?
Mr. Chair?
Yes.
Okay, so the vehicles first, I'm gonna talk about a little bit. So yeah, that was something that was mentioned, that we're with the supply chain issues. It may prove to be difficult at first, but hopefully the supply chain issues with the vehicles does level out. I think it was last year when we were looking at purchasing 4 more vehicles for Health and Human Services Department. I did reach out to AF Motors and discussed what our potential vehicle needs are going to be next year. They are still experiencing some issues with ordering from GM. So this is something we're going to try to do with these vehicles, but yeah, there's just so many issues with getting any new vehicles, even from the major dealers down in Milwaukee that have the state bids. And then the Parks Department. So they are not an enterprise department or enterprise fund. They're in the general fund. Typically, that's how most parks departments are with other counties. They're actually funded on the tax levy. So the sales tax that goes to the Parks Department is actually just going into their capital fund, because they don't have enough operating revenue to be able to fund fully their capital. Hopefully that answers your questions.
Yeah, I'm just thinking that maybe we need to slow down on some of the stuff at the park so they could, again, also get off the sales tax portion and be self-sufficient, kind of like we want for the solid waste. My last question is, you mentioned that the library levy was going to go up $14,500. Is that correct?
Correct.
What percentage is that compared to the 2.832 that the county's going up?
I'm just going to scroll right back to that one. I didn't have the percentage written down. I apologize. Okay, so it's going up to $494,965. So it's right around 3%.
3%.
Yep.
Okay, thank you.
You're welcome.
Mr. Chair,
Yes. Rich,
when you say fleet vehicles, you're talking like Health and Human Services, you're not gonna be replacing the sheriff's vehicles, correct? Every 2 years?
Mr. Chair. Yeah, so the it's just the fleet vehicles. So like the minimally modified or unmodified vehicles. Sheriff's Department has a lot of modifications in their vehicles, which kind of adds cost. So theirs are still gonna be on the same schedule.
Okay. My next question is the major dam repair for Cottonville. Are we gonna use the money that we set aside that if something happens to a dam, the $1 million or whatever for that, or are we gonna use the levy, or how is that gonna be paid?
Yes, from their capital fund.
Yeah.
So it's going to tap into that $1 million of sales tax that we put there this year.
And this next one's kind of a comment. I was at the WCA convention and it was asked of how much Health and Human Services are of county levies, and I see ours is what, 15.9 or something? There were some counties that were at, I mean, there was actually one county that was 50% of their, so I think we're doing pretty good in that area. And my last comment or question is about the extra driver that's being eliminated, or the, not the extra, I guess, the driver that's being eliminated. Didn't we just pick up like the city of Adams? Seems like that's a pretty big area to cover, and we're gonna eliminate the driver. I'm all for it, you know, if we got extra drivers, but is this gonna be readjusted if more townships jump on board?
Mr. Chair?
Yes.
Yeah, so, okay, HHS, address that one first. 'Cause I did have data previously on looking at other health and human services departments, and how much levy they have versus total revenue. So this is 2021 data. We were at about 17%, which was the third lowest for percentage wise of total revenues. Tax levy being total revenues. So 17% of tax levy is the percentage of total revenues. So other counties that have a combined health and human services department, they go from Columbia, I think, was the lowest at about 15%. Langlade had about 50% of their revenue being from levy. So it was all over the board. The solid waste department. So yes, we did just pick up the city of Adams contract. And yeah, when we do pick up new contracts, that type of stuff will be evaluated. But a lot of these newer contracts, we're finding that with the automated trucks, and we're pushing the automated trucks and the carts, that they're a lot more efficient. They're able to get these routes done in the time that we allotted through the contract. So they're a lot more efficient there in that aspect. And then with the split body trucks as well, after doing it a while with the regular trucks that aren't split, they can kind of see how much tonnage is coming in and see if they can deploy a split body truck for those contracts based on volume.
Mr. Chair, I just want to thank Cynthia and Kyle and all the department heads. It looks like a good budget to me.
Yeah. Supervisor Varsky.
Thank you, Mr. Chair. Kyle, regarding new vehicles being purchased, and I don't know, I guess Rick brought it up, but those vehicles that have not been delivered, that have not come off our expense side, how is that accounted for? I mean, when we talk about buying new vehicles going forward, you know, what happened to the others?
Yep. Mr. Chair.
Accumulating or what?
Yeah, so we're just assuming that we're not even gonna get them this year. So we're gonna try again next year. We're gonna get rid of all the ones that they have currently, but we're not gonna get rid of them until we actually get vehicles. So yeah, that's why we said all 10 for health and human services. But even though we don't have 10, I believe we have just 6 fleet vehicles right now, 5 Malibus and an Equinox. Hopefully that answers it.
It would have if I could have understood what you were saying. Sorry about that.
Mr. Chair,
Yes.
allow me to kind of give clarification there. So what happens when you have capital that was assigned for this year, let's say we anticipated spending, it rolls over into the next year under assumption that, because you know, you can't just buy stuff for last year and in the 2023 budget, you have to kind of roll that in, which is what Kyle mentioned, that we're replacing all their vehicles for 2023. Not all, I'm talking about the ones that are just the standard.
And that's my question. And so we're gonna replace 5, I think, at Health and Human Services, and we didn't replace any because we couldn't get them. And so now when they become available, are we replacing them 5 from 2021 as well as 5 for 2023?
Kyle, do you want to address how many vehicles?
I think that's why he said there's 10. So really, we're not buying the 5 this year. So now we got a budget that we're gonna buy the 5 plus another 5. So we're buying the 10. So it's sort of the money from last year came into this year will be transferred in, you know, and then so. Yeah, will they be able to buy 10? Yeah, maybe not, but
Was there a day of reckoning coming? I mean, that would be a question for me that it's like, where does this stop?
Scott Page.
Mr. Chair, the highway department, I think, you gotta be kind of flexible with what, when you're dealing with these, government vehicles. They had the truck that we specified we wanted, they didn't have, but they're like, hey, could you do a 3/4 ton instead of a 1 ton? And sometimes you just gotta, say, okay, I think Kyle and whoever's dealing with this just need to say, if you got a car and it's, a spec off or something, let's just take it, I think you gotta give them some flexibility there.
Sure it doesn't have. It's just been, a major problem getting these things, from into the dealerships and then moved on into the county. I mean, it's nothing that's not, United States wide. It's not just us.
Any other questions on the budget? I mean, I would suggest that on that last slide sheet, when you talk about, any supervisor's questions, contact county manager, I think make sure that they know that if they have any budget revisions that they want to propose, that they work with the county manager and you have that template, because they gotta know where the money's coming from if they want to put additional monies to spend in the budget too, so. I know we've always said that, but with a bunch of new supervisors, they need to know if they're gonna make any kind of budget amendments on the floor, to run through the county manager, so.
Right.
Chair.
Mr. Chair.
Yes,
Go ahead, Kyle.
Oh, sorry. I was gonna point out, UW Extension actually, helped out with advertising for a budget book cover. So, they put out that, students or individuals can submit like pictures for a budget book cover. So at the county board meeting, when we do the presentation, we're gonna kind of have a little vote on, what picture to use for the budget book cover. Just kind of a little community involvement type thing that we're doing.
any other questions, suggestions? Okay. Otherwise, upcoming agenda items. If there's any budget amendments, we'll have to include that, but I don't know what in the next meeting would be set.
There's a joint solid waste.
Oh, yeah, we already have that one set. That one's on that. But then the next scheduled admin and finance meeting.
So we have one on the 19th, and that was for passing the budget resolution. That was solely what it was going to be for. We could just pass the budget resolution at the next regular admin and finance meeting. So
Well, we have to have it in time for the posting and
Board.
meeting, right? So we'll be on the 4th then, probably looking at. So 4th, does that 4th work for everybody? Okay,
Mr. Chair,
but yeah, I guess it doesn't work for me, but I mean, it doesn't know that time works. Well, it doesn't matter. I'm out of town for 3 weeks, but I'll probably have to be virtual. So I might be back here. I was gonna go deer hunt.
Well, maybe we'll do it first thing.
So, okay, we'll plan on the 4th at 9 o'clock. I had to find some time. The 11th won't work for me, but the 4th, so I'll make the 4th work somehow.
John,
Yeah,
county board, it's scheduled here on the same day as election day, is that gonna stay that way?
No, the county board is on the 15th.
Okay, so you're gonna go back, we talked about, or Kyle had talked about, somebody talked about the second Tuesday.
Well, one is normally the second Tuesday, because normally they have to have it in by the 15th, but they can actually do it on the 15th, the same day as the county board meeting, so.
Okay,
The county board meeting will be at 9:30, is it, or? Yes,
On election day.
no, on the 15th,
Okay, because it's still on the.
It's still on the
On the.
on the calendar,
calendar, the, right.
oh, that'll have to be moved then. I was looking at my calendar. Not the county calendar, so, yeah, it'll be on the 15th at 9:30 in the morning. Anything else? No. I declare the meeting adjourned. Thank you all.
Where do you stop?